Welcome to Insightful Value, where we uncover stocks that may be out of favor, but not out of potential. Today we're talking about Flowers Foods, yes, the maker of your favorite supermarket bread, and why its stock price has gone a bit stale. But is there more than meets the eye here? Let's find out. As always, this video is for informational and educational purposes only and is not financial advice. If you're into value investing or just want to discover overlooked companies, make sure to subscribe and hit that like button. Flowers Foods is a major player in the packaged baked goods industry. You've probably eaten their products without even realizing it. Brands like Nature's Own, Dave's Killer Bread, Wonder Bread, and Tasty Cake all fall under the Flowers umbrella. The company distributes fresh baked goods to supermarkets, convenience stores, food service outlets, and more across the United States. Flowers Foods has a long history of consistent revenue, with annual sales over $5 billion. Its business model is relatively simple: high volume, low margin consumer staples. Recent performance, however, has been weighed down by inflationary pressures, rising labor and input costs, and shifting consumer demand. While net sales have seen modest growth, operating income and margins have been under pressure. Gross margins are hovering around the mid 40% range, while operating margins are closer to 5 to 6%, fairly typical for the industry, but not exceptional. From a value perspective, the company currently trades at a lower price-to-earnings ratio than its historical average, which has drawn attention from income-oriented investors. Flowers pays a healthy dividend with a yield around 4.5% and has raised that dividend annually for over 20 years, qualifying it as a dividend achiever. The payout ratio is elevated but still within a sustainable range given the company's steady cash flow. So why is the stock down? Besides macro pressures, investors are concerned about stagnant volume growth, supply chain issues, and how the company can maintain pricing power in a more cost-sensitive consumer environment. There's also uncertainty about how Flowers will compete in the long run with private labels and health-focused startups in the bread and snack space. On the flip side, if you're looking for a relatively low volatility stock with strong brand recognition and consistent dividends, Flowers Foods might be worth a closer look. It's not a fast growth story, but it could be a steady player in a defensive sector, especially if input costs normalize, and the company continues expanding premium brands like Dave's Killer Bread. At Insightful Value, we break down stocks like this so you don't have to wade through 10Ks and earnings calls. We offer straight-to-the-point analysis designed to highlight the real story behind the numbers. Whether you're experienced or just getting started, Insightful Value is here to make investing smarter and simpler. For more info on Flowers Foods and other undervalued stocks, head over to insightfulvalue.com. And remember, subscribe to our channel and give this video a like if you found it useful.